Hey, what's going on guys? Welcome back to the channel. Today I wanted to take a deep dive into one of my favorite Canadian companies. I want to go over everything from earnings to future projections, as well as my buy target and long-term opinions I have for this stock. This stock is both a dividend and growth player that offers low risk and quite a lot of reward. And of course, the stock that I'm talking about today is Canadian National Railway, ticker symbol CNR.TO. Before we get into the analysis, remember to hit that like button down below as it really helps the channel to grow. Also consider subscribing for more investing videos like this to come, including analysis of big Canadian stocks like Bank of Nova Scotia, Air Canada, TELUS, and many others. I also got a Wealthsimple referral link down below, which gives you $10 when you deposit and trade with 100 or more, which is an instant 10% return on your money. Now let's get right into the analysis. The first thing I want to cover is CNR's response to the pandemic. CNR was able to stomach the pandemic very well, dropping only 21% from its peak due to the essential nature of transportation. Comparing this to the rest of the market, we see that this was only a small setback for this transportation giant. Since that dip, the stock has ripped through all-time highs, gaining over 54% since the market bottom. CNR is now slightly down, currently trading at $140. The response to the pandemic was really solid as they were able to adapt quickly and had almost no hiccups in the supply chain management process. Earnings also came out last month and I'm really liking what I'm seeing. For the year compared to 2019, revenue is down 7%, earnings per share is down 14%, and operating income is down 8%. At first glance, these numbers do seem a bit worrying, but looking at the final quarter of 2020, which is also the most recent indicator for the health of the company, we see a vastly different picture. Looking at this final quarter, we saw a 2% gain in revenue, a 17% gain in earnings per share, and a 16% gain in operating income. This came at a time when the demand for oil, one of CNR's largest revenue sources, had dropped off a cliff. CNR has not only been able to stay consistent, but also slightly beat out earnings. The fact that they own their own freight plus their trucking and railway systems, along with the great relationships that they built with companies in this space, has allowed them to continue operating at such a high level. CEO John Roust added this statement with their earnings release. While the recovery remains uneven across the markets we serve, we are pleased by the momentum in volume demand that grew during the fourth quarter and continues to grow. We are increasingly optimistic about 2021 and we are reinstating our full financial outlook. We are also pleased to be announcing our plans for a $3 billion of capital investments to stay ahead of the demand and keep meeting our customers' needs through safe and efficient operations. This $3 billion capital investment is something that I'm really excited about. They already have the largest railway connection system in all of Canada. Adding to this system will further separate CNR as a leader in North American rail transportation. Looking at CNR's income statement, we see a company that even through one of the worst public health crises has been able to consistently turn a profit with little signs of hindrance. Net income was $3.56 billion compared to $4.2 billion from the year prior. This to me is honestly pretty solid, and I was personally expecting to see an even lower net income given the fact that oil was beaten down so heavily. One thing that I really like is that they have added over $500 million to their cash and cash equivalents compared to last year. With the extra debt that they have tacked on, this simply gives them a solid reserve that they can tap into if the need arises. Looking at the company in the long term, I see an extremely small percent chance that this company does not continue to grow both in share price and in dividend payouts. I have heard of some people being cautious with not only this company but with the entire industry as we see a turn from gas to electric. These people say that with autonomous trucking on the horizon that the rail industry will fall victim to the increase in efficiency that trucking will bring. Personally, I don't believe this at all. Currently, trucking at the very least is 3 times more expensive than rail, and a lot of this cost is associated with human drivers. However, what trucks carry compared to what rails carry is so vastly different that even with a decrease in cost, it still would not make economical sense to get rid of the railway system. Railways are so efficient because they carry heavy cargo over long distances. Depending on the cargo, one rail car can haul over 400 times more than what one semi-truck can. Additionally, trains consume over 9 times less energy per kilometer traveled compared to a truck. Railways will continue to be the efficiency king for the foreseeable future and be used for heavy cargo transport over long distances. Don't get me wrong, a future filled with autonomous trucking will become invaluable for companies over short distances. But for cross-country journeys, nothing will beat the efficiency of steel-on-steel transport. Also, it's important to note that CNR does have its own trucking division. This is helping them to become really dominant and harness all aspects of the transportation process. This vertical integration doesn't get talked about enough when people analyze CNR, but I believe that it's one of the sleeping giants that will help them to become the most dominant player in the industry. During the past 5 years, the average dividend growth rate is 12.8%. I believe that this is going to continue to grow at a solid pace, which is going to help it to become one of the big names in my portfolio. Some people have asked me why I choose CNR over CP. The two companies are pretty intertwined, but one of the main differences is that CNR transports more goods in the mining and forestry industries compared to CP, which is more diverse. Also, CP does have a better price to earnings ratio, which means you are getting a better value when purchasing them. However, the fact that CNR does have the bigger railway system continues to push me towards them, as I believe this is the best indicator for the future growth of the industry. I believe that it's easier to change what you're transporting than it is to build more railways, which gives CNR an inherent advantage over CP. If choosing between the two does worry you, you could simply hedge your bets by purchasing an equal share of both of them in your portfolio. That's it for this analysis. Let me know what you think of CNR in the comments down below. Remember to hit that like button and also consider subscribing. I'll catch you guys in the next one.